Welcome to Kicks and Minivans, the podcast for dads, especially the ones that love sneakers. I'm your host, KG. However you're tuning in, listening, watching today, man, we appreciate you being here. You can be anywhere. So the fact that you're here means a whole lot to me. This podcast exists to help men win in marriage and parenting. And one of the areas that can get really, really sensitive to talk about is money. It can cause tension in a marriage. It can cause tension in a church. It can cause tension just about anywhere. Like, people don't really like talking about money that much. But it, I think, plays a huge part, obviously, in our households. And so it was a topic that I knew we had to bring up, we had to talk about, we had to tackle. Because as men, we're responsible for leading our home, and leading financially is one of those areas we have to learn to lead in. And our money isn't the everything, it's not the only thing, but it impacts every area of our life. Like, it just costs money to live, it costs money to exist. We all know it's true. And it impacts so many different areas of us, and it can cause tension, it can cause anxiety, it can cause stress, cause us to lose sleep. And so we wanted to tackle this, and so we're hitting it with not one but two episodes dropping today, a double episode release. In today's episode, we are interviewing DJ Brown, who is someone I went to college with, but he is the founder of StockDads, which is a group, a business that exists to help guys build generational wealth. And so he's doing amazing things, teaching dudes about how to handle their finances, how to invest, how to play with money in the stock market. So I think you're going to really enjoy our conversation with DJ today. The other episode that's also releasing is just a part of me and my wife's story of when we started getting serious about our finances. We knocked out $80,000 worth of debt in under 2 years, and it changed our life forever. And the sacrifices we made during those 2 years will set up the rest of our life. And so I wanted to kind of walk through, hey, what are some of the things we did to make that happen? So you can check that out in episode 10. But for here, right now, let's check in with DJ Brown. I think you guys are going to love this talk. DJ, welcome to Kicks and Minivans. Thanks for joining us, man.
Thank you for having me. I appreciate it. I'm excited to be here.
Hey, well, tell us a little bit about your family.
Where to start? So I've been married for 8 going on 9 years, to my wife, Jenna, who I met at Indiana Wesleyan, where you and I, go back to.
Yup.
And, we have 2 kids together, a 6-year-old girl, named Paisley, and a 4-year-old son named Jackson, to keep me nice and busy. And, they're at fun stages in their life, and lots of firsts and, all sorts of, growing pains and all sorts of craziness, I guess. My house is wild, but it's fun.
Yep. 2 kids that close in age, ours are 2 years apart, exactly, almost 3 and almost 1 now. So not at your age, but that 2 years apart, man, it's a wild time.
Yeah, it's a roller coaster.
Wild time. And you're a minivan dad. You're a minivan dad, right?
Yes, sir.
So what are you driving?
I got a Honda Odyssey. Jet black. I like to call it my swagger wagon. It's
the Odyssey's the cream of the crop right there too.
Dude, it's the maiden voyage. I love it. It's I'll never go back. I didn't think I'd be a minivan dad. I've listened to your previous episodes. Kind of feel like we're in the same boat where never thought it would happen. Kind of resisted it, and then once I got it, I'm like, game over. This thing's the best thing I've ever driven. And
once you click the buttons and those doors open, it's
amazing.
Wow, that's it.
Yeah,
that's it right there.
We bought another car. We have a Tesla, and you'd think, okay, well, that'd be a fun car to drive and stuff, right? I mean, I prefer the minivan. I'll still take the minivan every day when I can. Yeah, I'll leave the Tesla parked, and we'll rock the minivan when I can.
That's gonna ruffle some feathers right now.
Mm-hmm.
Because I got some people pushing back on me, man. Like, I'll never drive a minivan. This man owns a Tesla.
Yeah, I got a Tesla
and he says,
Model S.
I like my minivan. Give me the swagger wagon.
I got a Tesla Model S, and you give me my swagger wagon. Yep, absolutely.
I love it. So you don't notice, but I had driven a minivan. We went to a conference in Atlanta a while back, and I drove a minivan. There was 5 of us there. And as soon as I drove that, I was like, yo, I'm going to own one of these one day.
right? And then it was when you were selling an SUV. We had just found out we were pregnant with our second. And when I saw you were selling the SUV, that like put in my mind like we need to get a bigger car. And then I started looking at the SUV, started checking yours out, and I was like, I want to buy from DJ, but like I want a minivan, bro. Like,
yeah,
are you selling your Honda? Like, are you selling?
I know, right?
No. So
that's awesome. That's interesting.
We got a jet black Town and Country, and we love it, man. It served our family really, really well.
Yeah, can't beat it.
So
can't beat it. The comfort, the space, the convenience, everything. It's a winner.
Yep, it is, man. All right, so we talk minivans. Let's talk kicks for a second. Are you a big sneaker guy?
I'm gonna say I'm a weird sneaker guy. Like I like sneakers. I like to have some nice shoes for very specific reasons. But like I wouldn't call myself a sneakerhead.
Okay.
You know, I have a respect for them, but I wouldn't say that I know them as deeply as I feel like you know them. But I got some cool stuff I think to show you tonight.
That's all right. All right. Show us. What do you got? What's some of your favorites?
Yeah. So like my everyday kind of walking around shoe, I got like the Nike Blazers 77 vintage. So not
Blazers,
you know,
clean.
Yeah,
clean and classic, dude.
Classic, you know, sharp looking.
Go with anything.
Yep. And then I'm a former basketball coach and, you know, big basketball player and love the game. I used to wear these Kyries, the Friends version, right?
The Friends, yes.
Yeah, got the nice Friends version. These are my old
Those
shoes.
Are the Kyrie 6s, I believe.
Yeah, Kyrie 6s.
I remember correctly.
Yep. And then I just actually like 2 weeks ago replaced them. I got the Jordan 37 Tatums right here.
Oh, you got the Tatums. Okay.
Yep. So I don't know if I'm a huge fan of them yet. I don't know.
Have you played ball in them or just worn them?
I played in them a couple times. Yep. Like, so if I put my hand in here, like you can see my fingers. So it's like,
so it's, yep.
It's got that, like, okay. I didn't know that when I bought them. I didn't do enough research, you know?
Yeah.
They feel like, you know, breezy on my feet, which is kind of nice when I'm playing, but also it feels kind of flimsy. I'm a big guy.
Would you recommend them if someone's looking to get a new pair of basketball kicks? Would you recommend them or no?
I would say if you are not a big gentleman like I am, they're nice, right? But like I'm a big guy, I need a little extra support. I need to feel like my shoe's not like paper thin, you know? But they're light, they're comfortable. I had some, you know, for me, some bounce, which is, you know, maybe I could get a couple sheets of paper under my feet when I jump, so that's good, you know, always an improvement over nothing.
I brag on my 4-inch vertical.
There you go. So that's about twice as much as mine. So yeah, I'll take it. But I would say they're nice, and they're actually on sale right now, which pisses me off because I bought them about 2 weeks ago full price, and then I just looked today and they're like $60 cheaper. I'm like, man, gotta love the timing, right? Yeah,
nothing hurts more than that.
Yeah, so go grab them if you want them.
Have you tried out a pair of Zions?
I have not tried out Zions yet. I should, because he's a big fella like me. So
a couple guys I play with. There's a guy I play with that's a big guy, and he has them, and then he went and got another pair, and he just swears by them. He's like, for a big dude like me, he's like, they're perfect. So
that's good to know.
That might be a pair to check out.
I'll check them out next time I'm in the market for a new shoe. As you can see, Kyrie 6s to now, it's been a while, so
it's been a minute.
It's been a minute since I bought a new pair, so we'll see. I only play like once or twice a week, so we'll see how long these last.
I wish it was more. It was more, but that's about what I got time for right now.
For sure.
So, do you have a dream pair of shoes? Is there one that you would love to own one day?
Those I forget what they're called, but I think they're like the Back to the Future Nikes. Those high ankle ones, the Air Mags or something like that. I think they're called.
Oh, you went high.
Yeah, those are like my dream shoes. Like that's like I've made it. You know, like money's no object to me anymore.
You made it.
Yeah, that's my dream shoe. I'm gonna buy those someday, and that's when I know I made it for sure.
To the moon, right?
Yeah. It's about as much
all
as a
right.
car. So I think
Yeah,
for now I'll pass.
I'm pretty sure of everyone that's been on Kicks and Minivans, you have the most expensive dream shoe
There we
so
go.
far. So
Got to dream big,
shoot
man.
big. Shoot
Got to
big.
dream big.
He said
Yep.
he's not a sneakerhead. All
That's
right.
right.
We're going
Love
to put
it.
a picture of that on screen for those watching on YouTube. We'll put the StockX link in there for
There you
people to go find it.
I think they're going for like 40,000 right now or something like that. So
I'll just never
It's-
own them. So that's,
the same. I won't either. I don't think even if I do make it, like, I don't know that I could bring myself to spend that much on shoes. It kind of goes against everything that we're probably going to talk about today. So
probably, but it's fun to dream. It's fun to dream
It
and
is.
imagine, right?
Yep.
So let's get into that, man. Give us a quick overview of StockDads and how it got started and where it's at now.
yeah. So StockDads, man, it's I don't know, it's still crazy to think about. StockDads started about over 2 years ago. It started as just like a weird little hobby that I started to pick up, kind of during COVID, which was just trading stocks. And then, obviously you and I share, in this, everybody listening to this podcast probably share like the passion for being a dad. So I was just in a dad group on Facebook, a random group, and, I happened to make a post about it, and, people were like asking me all these questions. Oh, how do I do this? How do I, whatever. And I'm like, man, I just learned myself. Like, I don't know what I'm doing yet either. So I decided to start a Facebook group specifically for stocks and dads. Cause I was like, we're not going to blow up this dad group with stock stuff all the time. So let's, just start a separate group and talk about it there. And, like overnight, like the group just exploded. We had like 2,000 members overnight. And then like 2 weeks later, we had like 10,000 members. Like it just started to really like erupt. And all of a sudden, there's thousands of dads, asking me questions and using me as a resource. And I'm like, they're asking me stuff that I don't know. They're saying like, and I'm not going to be like the source of bad information for anybody. So like, I was like, guys, I don't know the answer to this, but here's what I'm going to do. Me and my roommate, Mike, we started my former college roommate, we started a podcast. We were like, all right, we're going to start a podcast and we're going to go basically on this mission to learn about this stuff. We're going to, get guests on, professional, traders, professional investors, professional hedge fund managers, financial planners, accountants, CPAs, all that stuff, right? We're going to get them all, interview them, ask them all these questions, essentially learn all about this stuff. And we're going to record it all and bring everybody with us. So everybody that was wanting to know this information, want to learn it, we sacrificed ourselves as the ones who were going to ask all the dumb questions that nobody else wanted to ask. We were going to ask all those dumb questions, and the podcast took off, and the podcast, grew and grew and grew. And, that was a lot of fun to watch. And then all of a sudden, like I started seeing, I'm kind of an entrepreneur at heart. I've done like, basketball coaching on the side, like stuff like that. Always trying to, hustle and grind and, just pick up what I can where I can. I started to see like a business opportunity with all this because I'm like, man, there are a lot of like dads out here who don't know how to invest for their families. And they're like dads that make good money, like I make good money. I made good money before StockDads, but I didn't really ever know what to do with it. I had a decent salary and I wasn't raised in a family that like, they taught me the value of money and they taught me the value of hard work and stuff, but like investing and, how to really make your money work for you was never really something that we talked enough about. And so, I just felt like there's like an opportunity here for me to, one, help a lot of people, and provide resources for these people. But two, build a business out of it and, make something for myself and my family. So we ended up building a Discord community, where, people can pay a monthly subscription or a annual subscription or whatever to join up. And I hired a bunch of professionals, like people who actually know what they're doing. I'm not the source of information in the Discord either. I'm just the man behind the curtains, kind of pulling the strings or whatever. But I hired a bunch of professionals that did know what they're doing, and that through the podcast experience, like I deemed to be trustworthy, right? Not, this, follow me and you'll have a Lambo next week type mentality that you see across Instagram and, whatever, all these personal finance gurus where, follow me and you're going to be a millionaire type garbage, right? I mean, eventually, hopefully a lot of our dads become millionaires, right? But it's not a get rich quick scheme. So I hired a lot of trustworthy professionals, put them into a community, and all of a sudden, the community took off, and now it's become it's just kind of got a life of its own, and it's providing a nice livelihood for my family, and I think we're providing a lot of awesome value for a lot of dads out there. So,
yeah, absolutely. And that Discord is it's full of resources, and we'll put links to it in the show notes and stuff. What's the name of the podcast?
So the podcast is called Stocks and Sandals, kind of a play on socks and sandals, because what I didn't mention is that when I'm not wearing these bad boys, I'm really rocking socks and sandals most of the time. So
we were going to get that out of you one way or another. I tried to be cool, and I tried to talk. I just bought these like last week, so this is like I didn't buy them for the podcast, but I was like, yes, good timing, right? I actually have. You're like, I got something on it. We just ask you to be yourself. That's what it's all about, man.
If you're asking me to be myself, about 95% of the time I'm wearing these rubber Birkenstocks from Amazon and a pair of socks. So that's my comfy, cozy shoe. So
hey, everyone's got their things, man.
Yeah.
We
named these Stocks and Sandals.
I got all these sneakers, but I'm a stay-at-home dad. I'm in my slippers like 90% of the time.
There you go.
Yep,
exactly.
Dude, they're comfy. I like being comfy.
For sure.
What can I say? So what's it been like, man? Because that's, I joined in. I don't even remember how many members were in the Facebook group when I joined in, but it was fairly early on. And it's been fun for me. We were talking before we started recording, like, it's just fun for me on social media to watch friends create something and have it grow. Right? Like, what's it been like to see something that you created? Because you got like tens of thousands of members in there or something now.
Yeah, we got around 30,000 in there now.
30, that's what I thought. What's it been like to watch that grow over the last 2 years?
Surreal. It's, I don't know. It's never, excuse me. It's never something that I like saw myself doing. It's never something like I went to school for athletic training. I still work as an athletic trainer in I've moved into a marketing role for an athletic training company, but I just never really saw something like this happening. And even when it started, it was completely unintentional. It just kind of happened. So it's been very surreal to watch. It's been, I don't know. It makes me proud, but also as a father, like, I feel like I'm always on edge because it's something that's like, it's like it's been a gift to me from God, to have this opportunity to be, gifted with this enormous blessing of, a very successful business kind of out of nowhere. So like, I feel a ton of weight and responsibility to like keep it and not, let it die. And that's something that's, it's, as a father, it's nerve wracking, you're always, I'm always looking at numbers. I'm always looking at all my data, and it's like, I just want to make sure that we're constantly growing in the right direction or stable, whatever, because at this point it's become, such a providing source for my family, that, as a father, right, you don't want to lose that because you see what the potential for what the future could hold if you can maintain it. So, but it's been really cool to see. So very grateful.
Yeah. So the mission of StockDads is to positively impact the financial well-being of future generations, right? And that, I think that the term generational wealth is being used a lot lately. And I don't know if that's like a new thing with millennial talking about generational wealth. It feels like that. But there's clearly a need for this discussion and information that you're providing, because almost 2 out of every 3 American households live paycheck to paycheck. 63% of Americans are living paycheck to paycheck, and 45% of 6-figure earners, people earning $100,000 or more a year, almost half of them are living paycheck to paycheck. So they're not exempt from it either. So why do you think so many households are struggling financially?
I mean, I think it's a generational thing, kind of like you mentioned. I think that, our parents and, their parents, like money's kind of taboo, and it's not something that you really were super comfortable talking about, super open with sharing. And I think, like, for me specifically, like my own personal experience is that my parents weren't, again, they weren't financially illiterate, but they just, I don't know, they didn't know how to really fully maximize, their income and what they, how they were investing and stuff like that. So that never got passed on to me. So I think it's like a generational thing where people either, really know how to handle their money well, but don't feel comfortable talking about it and being open about it, or they just don't know how to manage their money well. And then, obviously that trickles down the line generation to generation as well, because if you don't learn it in school, which I think our schools completely and utterly fail at this, teaching,
Agreed.
you may get an economics class or a personal finance class, but it may be one semester, or maybe, like something that's breezed over. But really, like, that's kind of all, I don't know, it's like the bare minimum basics, right, that you learn and stuff like that. So unless you go to school for finance, it's just not something that you learn. I mean, you don't just pick it up along the way unless somebody teaches it to you. So that's kind of where, StockDads comes in, and kind of my vision for StockDads is to essentially fill that gap in a lot of people's lives, right? A lot of these people that grew up without, learning about this stuff from their own parents, we want to teach it to them, so that they can, go ahead and then teach it on to their children and their children's children and their children's children's children. So, I mean, it really is like it's a butterfly effect. One person, it only takes one person in a lineage, right, to really change the course of, the entire future of their family. It only takes one person to, say, screw it, I'm going to learn this stuff, I'm going to understand it, whether or not it immediately impacts my life and makes me, I retire early or I get rich, whatever. It's not about that, especially for a father, right? I mean, you and I both know that everything we do is for our kids. It's not for us. We do a lot of stuff for us too. I mean, this is not something that I'm saying don't do for yourself. But even if you feel like it's too late for you, which it's not, that's a really common misconception. Even if you feel like it's too late for you, well, it's not too late for you to learn and pass this stuff on. So that's what we teach. We teach kind of a lot of different ways to skin the cat. I'm not going to war with Dave Ramsey. Dave Ramsey's got kind of a one size fits all approach, which works very well for people in, a certain stage of life with a certain, with a lot of debt and so on and so forth. But even as you mentioned, you don't necessarily even have to be in a lot of debt to not know how to manage your money. You could be making 6 figures a year and and still living paycheck to paycheck, because you just don't know what to do with it. You either don't understand your spending habits, or you don't know how to invest it. You don't know how to make it work for you. And with inflation and, I mean, everything, if you don't know how to handle your money, it's that dollar is getting less and less every year. So
it is. And I love what you were saying. Like, and this is something like my parents, they did what they could. And it's like, we always had food to eat, but I don't think it was till later in life that they really knew how to maximize their income, like what you were saying. And they, so when I started out working when I was 21 years old, I didn't know what to do with my income. Like, I knew how to write a budget and stick to a budget, but I didn't know, like, all right, how to pay off debt, how to invest for my future. And now I'm sitting here at 32, like, man, I wish I could go back 10 years and start then. And it's like, I can't do that. It's not too late for me. Like, I can't do that. But like, I know, like, me and my wife, we're going to be fine.
Right.
But I get really excited when I think about what my kids' financial future will look like as an adult. Not because they're going to become some kind of trust fund babies, but because I know that they will have financial knowledge and wisdom. Because I've taken it upon myself to learn that so I could pass it down to them. And so even just that wisdom, even if you're not leaving your kids a massive inheritance, if you can learn to manage money well, man, it's like you want to set your kids up to be in a better spot than you are.
100%.
Yep.
That's the be all end all, for me with StockDads is to change that mindset for as many people as possible. It's not too late for anybody, but even if you're behind where you could be, man, our kids, my kids, I mean, they're like just getting started, man. You can start putting away, pennies for them now, and it'll grow and grow and grow. And then you teach them when they're old enough and, that they can do this stuff the right way from day one, man. I mean, we're setting up future generations, way beyond anything that we can imagine at this point, and that's the end goal for sure.
Yeah. Yeah. So let's talk about inflation for a second, because I feel like we can't have a financial episode and not talk about inflation, because the price of eggs is like a viral thing on TikTok right now.
Yep.
Right. Like people are freaking out over the price, which rightfully so. Like, even at Aldi, we shop at Aldi, they're like $4 a dozen last I was in there. Right. So how the struggle of Americans financially has existed before inflation, but I feel like inflation is just capitalizing it now. How have you seen that impact your household and other households as you're working with people?
Yeah, I mean, it's impacting people a lot because, inflation's at all-time highs. It's much higher than what most companies are offering as their annual raises, even cost of living raises, like just like the bare minimum that most companies usually offer is less. So even if you're making more in your salary this year than you were last year, you're really making less than you were making last year because the money just doesn't go as far. So yeah, people not understanding how that impacts them, how that should be modified in their budgets, how that should be modified in their investments, all that kind of stuff. It's a very impactful and draining event on a lot of families. And it is crazy. I mean, I went on a little weekend getaway with our small group, and we bought 2.5 dozen eggs for the weekend. And like when I opened up the fridge, I was like, y'all bought what? Oh, we're rich now, huh? Like, send that back. That's too much.
Like you're high class.
Yeah, right now, like what are we doing here? I was like, we're really splurging for the weekend. I mean, on eggs, and that got me excited. Wow, we got eggs. But it's something that's important for people to understand, to learn about, to be following how interest rates, affect that, how the Fed, every time the Fed talks and what that means to the economy and, what that means. Like, that's all stuff that we talk about and discuss in the Discord, teach as part of our StockDads Academy. It's all part of the big picture. But yeah, it's something that it's a scary time for a lot of people. But, this time and the markets being low and, facing a recession and all this kind of stuff. I mean, man, if there's no better time to get into the market, it's now. I mean, a lot of people go and, say, man, I wish I would have known, how to maximize the stock market, before the COVID crash, so that when it crashed, I could have taken advantage of that huge run up, right? I myself am one of those people. That's when I learned, was after the crash. So I missed a lot of that, like huge run up because I was just learning about it. Had I known what I know now prior to that, I mean, I'd been loading everything I had into the cart. I'm not saying to go and throw all your investments into the market right now. I mean, there's strategy and you got to understand what you're doing. But now's the best time to learn. Now's not the best time to go and YOLO your college savings into the markets, but it's the best time to learn what you're doing because the market always goes up, right? I mean, historically. We don't know when it'll go up. We don't know if we've already hit the bottom. We don't know if there's more downside to come. But, understanding and learning it now, taking that time to get it, is the best time to do it.
Yeah. I mean, just over the course of the history of the market, it's just always gone up. It's always rebounded.
Yeah.
And even though there's up and downs, it's up and downs on a spiral up the entire time.
So I want to make one thing real clear. To all our listeners, not all stocks always go up, but the stock market as a whole has always gone up. So there's a difference there. You can't just buy any stock you want thinking, oh, it's super low, it's going to go back up someday. That's not how it works. But the stock market as a whole, meaning like the S&P 500, like the index funds that, you know, kind of track the entirety of the stock market, that historically has always gone up. So even though that's down, I mean, unless for the first time in the history of the world, in the history of the stock markets, that it just decides it doesn't want to go back up ever, then it's going to go back up. So now's the time to start learning.
We got a lot more problems than your financial portfolio.
Yeah, exactly. You're not going to be worried. You're not going to be worried too much about your portfolio at that point.
Your retirement 30 years from now does not really matter if that doesn't rebound.
No, we probably got zombies at that point.
Yeah, I would say so. All right, so let's talk about the market for a second. So StockDads puts a big emphasis on trading and investing. And I hear those words exchanged a lot. And there's similarities, but there's also differences. Can you clarify those two terms for us, trading and investing?
Yeah. So big difference is essentially, you know, the time horizon that you're dealing with. So trading is usually shorter term. You're buying and selling on either the same day. If you're day trading, you know, even within a few minutes or seconds, if you're scalping is what it's called. You can swing trade, meaning you buy and hold a stock for a few days to a couple weeks at most. And then investing is really like, you know, the old Warren Buffett method, right? You buy something that you intend to hold for a long period of time. You're going to weather the ups and downs. You know, you're just going to go along for the ride. You buy and hold and hope that, you know, in 10, 15, 20 years, whatever your time horizon looks like, that your thesis has essentially played out and you are, you know, have a higher return than what you put in. Trading is more of that short term, really trying to capitalize on like the market's volatility, the market ups and downs, day to day, week to week. You know, so you have higher risk, but also potential for higher gains. So it's definitely one of those things where you don't want to go day trading without learning, right? I mean, most day traders fail because they don't take the time to learn how to do it properly. They don't take time to learn how to manage their risk properly. They don't take the time to understand how, you know, to remove their emotions from the trading. There's so many different reasons why somebody can try and fail at day trading or swing trading or any kind of trading, right? Investing in the very long term, it's a lot harder to fail, right? I mean, again, because as a whole, the stock market goes up, right? So, I mean, as long as you're not buying, you know, penny stocks that are crappy companies and you're trying to hold those for 30 years, hoping that they, you know, blow up, odds are if you're buying good blue chip companies or index funds or ETFs that kind of encapsulate all of different markets and different industries, odds are that those things are going to continue to rise over time. I mean, you're going to have the short term ups and downs. You're going to have the volatility still in the short term. But most of the time, if you're investing, you're buying and you're not looking at it, right? You're just holding it. It's just there. You know, you think your 401k, you think, you know, some IRAs, stuff like that, where you're, whether you have it managed by somebody else or if you're managing it yourself, I mean, you really got to learn to take the emotion out of it. So that's kind of the difference, and they can play well together. So one of the things that we try and teach in the Discord is to essentially have your fun money, you know, like money that you'd be spending, you know, going out on the weekend and, you know, partying or whatever. You know, all of a sudden you're a dad and you don't have time to do that stuff. You want to pick up a hobby, whatever. You know, you take that money and you learn how to trade with it, right? Because it's a hobby that you can do anywhere. You can do from your phone, you can whatever. You can learn how to make money, help that money grow and expand for you. I actually paid off my MBA with it. You know, I paid off the van with it, you know, all sorts of stuff, right? So, I mean, but that was my fun money, you know, like that's money that I could afford to lose. So, like, I knew going into trading that, like, odds are, you know, at some point I could lose this money and I got to understand and be okay with that. Especially in the beginning when you're just learning. Investing stuff, I don't even manage my own investments. I have my financial advisor do that, right? I take my emotions out of my retirement. I know I'm putting them out a certain amount in every month. I let them manage it because I get too emotionally attached. So we teach essentially have some fun, learn how to trade, take your profits from your trading if you make them, and put them into your long-term investments. Use it as a way to fund your investments. Because a lot of people, they pick up side hustles, right? Or they, whatever, they may have, they may try and go pick up an extra job on the weekend or whatever to try and have some extra money. You can do the same thing with trading. You could do it from your phone. Sometimes people can squeeze it in while they're at work, especially if you have a nice job or you can work from at home. You are, you're a stay-at-home dad, so you've got some time that you can be on your phone without a boss, watching over you. I mean, you got to obviously
My 2-year-old watches me, man.
He does watch you for sure. You do have a boss, but maybe one that you can fight back with a little bit, if you get in trouble.
I can still
there's
pick them up and put them somewhere,
There you go. Yeah. So I don't advise leaving your child unattended to trade, but hey, there's some opportunity there. But yeah, so we try and teach trade with your fun money. If you lose it, you're learning. If you make money, pull it out, fund your long-term investments, make sure your future's taken care of. That's kind of our approach.
Trading.
Yeah.
So
that's
the
kind
trading,
of our approach.
just want to make sure people are clear. Like the day trading, swing trading, whatever you call it, very high risk, potentially high reward with it as well.
Yep.
But inherently just a lot of risk that comes with that. So would you equate it to gambling?
Yes and no. So when I say that, I mean that nobody knows what the market's going to do. I mean, nobody, no matter how good you are, nobody knows what the market's going to do from 1 minute to the next. They can make assumptions based on, probabilities, right? I mean, there's a lot of different techniques and there's strategies for reading charts and there's strategies to look at, how the past is played out and, look at patterns and all this kind of stuff, essentially to increase your probability of being correct. But the past doesn't always equate to the future. So nobody knows what's going on. So essentially every time you trade, you're making a gamble, right? That what you're doing is right. Now, with that said, if you're properly educated and if you take the proper risk reward, and you keep the proper risk reward ratio, then, you're essentially guaranteeing yourself that if you, all right, let me try and break this down because it's kind of a complex thing to teach in a couple minutes here, but
yeah.
Every time you make a trade, based on what you learn from the charts, what you're looking at, what you're seeing, right? You have an estimation. Okay, I believe the price is going to go to this level, and I have these reasons to believe that, and these reasons play out this way. Let's say 60% of the time. Okay, 60% of the time this happens, the price will go up to right here. Okay, whatever. So if you manage your risk to reward properly, meaning, okay, I'm going to take a $2 or I'm going to take a $1 risk here. I'm going to risk $1 to make my $2. Okay. And if you're correct more than 50% of the time, then you're going to be profitable, right? I mean, you're going to have the ups and downs. You're going to lose some, you're going to win some, but every time you win, you're winning more than you're losing, right? So it's a game of probabilities. So it's almost like gambling, but also counting cards at the same time. It's like you're
as long as you're
count
educated
cards
on it.
If you're educated and you understand what you're doing. Again, disclaimer: do not day trade. Don't try to do this stuff without learning. Okay, that's what a community like mine's for. Take the time to learn. Otherwise, you're literally just gambling. Then you just throw your money away. But it's essentially like going to a blackjack table, but you've got enough information. You count cards. That the probability of you being correct more often than you're not is in your favor. So that's kind of how I would, in a brief, very brief, high level overview, that's how I would explain it.
I think that comes across clearly. So, all right. So trading then it's an option for guys to be able to make some money, right? Yep. And whereas the investing, I think you and I would both agree that's something that every dad should be doing.
100%.
Not every dad should be trading.
Nope.
It's an option, but every dad should be investing. What are some of those
100%.
things that you think every dad should be investing in?
So without getting into like specific stocks or index funds, because like that's totally dependent on your own like, you know, risk tolerance and your timeline, how long
I
you
guess
plan holding and all that
investing
stuff.
for. What should they be investing for is a better way to word it.
Yeah. So, I mean, you want to make sure that you're taking advantage. You want to make sure you're paying yourself first. Okay. So this is something that a lot of people may disagree with that are listening. People that, you know, may listen to Dave Ramsey may disagree with me, right? But it's also pretty common on the flip side, if you listen to enough people, that you should be paying yourself first. Meaning, you know, just like when you get paid, right? You know, you get your paycheck, whatever, you know, some people it's like non-negotiable. I'm going to invest a little bit. I'm going to tithe a little bit, whatever. From what's left, now I'm going to pay my bills. I'm going to pay, you know, I'm going to budget out everything else. I'm going to have my fun money, all that, whatever. But what a lot of people do is they flip that on the other end, you know, they pay their bills, they, you know, buy everything that they need and want. And then if there's anything left over, which there's usually not, then they're like, okay, maybe I'll invest it, or they'll just pop it in a savings account. Right. So what I think, you know, and again, this is not financial advice. I'm not a financial advisor. We have those in our Discord, but I'm not one of them. So don't take this for anything other than my own personal opinion and how I've managed my own life. You know, first thing I do is max out any employer match 401k, right? I mean, it's free money. So if your company offers an employer matched 401k, max it out because they're giving you money. I mean, for free. Okay. So we try and do that first. Actually, I mean, the first thing should be an emergency fund, saving all that money, assuming you have an emergency fund, assuming you know, have money to survive if something happens. Next step would be for investing would be, you know, max out the 401k. Once that's done, max out the employer match part of it. Once that's done,
100% guaranteed return on your money.
100% guaranteed return. You can't beat it. I mean, like there's no other investment that's 100% guaranteed return. So take that. Then if you got extra money after that, I personally pour that into a Roth IRA until I max it out for me and my wife. Roth IRAs, basically it's after tax money. So taxes have already come out of it. Then it goes into your IRA. It grows tax free from that point forward. And then when you withdraw it, you know, when you're however old you want to be, you get it tax free as long as you take it after, you know, a certain age.
You gotta love I love the IRA, man. And $6,000 annual limit, and then if you're married, you can do $6,000 a piece. So 12,000.
6,500.
Right,
I actually think that it just this year. Actually, I
Did
think it was either 6,500. They just increased it this year. So actually,
I did not hear that yet.
Yeah, I think it's 6,500. Don't quote me on that, but again, my financial advisor just tells me what they're taking and we do it. Yeah, it was
6,000 last year, so it may be 6,500 this year in 2023.
Yeah, so definitely look that up.
That's good news for us then.
Yeah, because again, it's just an extra 500 you could plug away. So then you max those out. I mean, and then from that point, it's really like it's personal circumstances, right? I mean, everybody's got, you know, goals, right? I mean, maybe you have a goal that you want to buy a new car. Maybe you've got a goal that you want to build a new house. Maybe you want to, you know, buy a boat, whatever. Everybody can have their own. Maybe you want to pay your kids college. Maybe you want to save up for your kids to have a car or, you know, pay for their wedding, you know, whatever. That's where I really recommend working with a financial advisor, because they will take kind of all that information, all those goals, and they'll, you know, plug it into their little formulas, and they'll take what you're investing and they'll essentially tell you, yeah, you know, at the rate you're going now, you've got this % likelihood of meeting those goals. And then from there, every situation's independent and it's totally different. But I really do believe that every dad should be putting something away, even if it's, man, $20 a month, something somewhere where it can start to compound interest over time, is something for your kids or, down the road, whatever. Do what you can do. Start getting some money working for you, because if you're only working for your money the rest of your life, then you're never going to have any sort of freedom. So,
yeah, you can't just live for today. You have to be thinking about the future too. And I think that was a big, we were in our late 20s when we started really getting serious and pay attention to our money. And man, it's sad because you look back and we had a couple years of being dinks, dual income, no kids. We had a couple years of that, and I was like, we have nothing to show for it.
Yep.
And it's like, man, like, I don't get too hard on myself when I was a single children's pastor, because it's like, man, I was paying rent and putting food on the table and paying my student loans. Like, that was what I had money to. I didn't have a lot of fun money left to play with. But like, man, we had a couple years of that dual income that it's like, I look back and I'm like, man, we don't have anything to show for that. And then it's amazing. Like, as soon as you get serious, how fast you can make progress.
Yep.
If you and your wife, you get on the same page, you get focused, you get on a plan, you get on a budget, and you can see the future. You can see the light at the end of the tunnel and say like, hey, there's hope. We don't have to live like this. We don't have to live paycheck to paycheck anymore for the rest of our lives and work till we die.
Yep. Yeah, it's crazy. And I'm the same. I'm in the same exact boat. I waited until my late 20s to really learn anything about this stuff. And now I'm 32 and I still got a lot of time, we're still young bucks in the grand scheme of things.
Right.
But man, had we known what we know now 10 years ago or 15 years ago, what sort of a different future could we have for ourselves? But the beauty is now we get to give that to our children. And that's the importance of what we're doing now is no matter what our future looks like, they're going to have a brighter future because of what we're doing now. So,
yeah. And I love that. And that's what I get the most excited thinking about, I know, me and my wife, we're not going to retire super wealthy. Like we'll retire nice. Like we got our plan set in place, like we're going to be in good shape. But man, I think about the position my kids will be in when they enter adulthood. And it's like the knowledge that I'll be able to pass on down to them.
It's huge.
And that investing, man, it's like you have to do that investing. Like you can't save your way to wealth. Honestly, like you can't.
Nope.
It has to be investing.
You look at, again, inflation. If your money is sitting in a savings account, you're losing money. That's all there is to it, because no savings account is paying more in return year to year than what inflation's taken away from the value of your dollar. So if money's sitting in the savings account, there is a reason to keep money in a savings account. Again, for emergency purposes, it's liquid. You can get it immediately if you need it. But you don't need to keep more in there than you need. Get your, the standard is 3 to 6 months of, expenses is what you kind of want to try and save up. I think that in some cases that's a little overkill, depending again on your personal situation, how, everybody's expendable. Everybody could lose their job tomorrow, but if you know what you're doing, you probably get away with a little bit less than that. Also, I know you and I would be grinders if we lost our job, or we weren't able to provide for our families in some way. If your wife lost your job, you'd go out and you'd be Ubering, right? Or, I'd do whatever I needed to do to bring money in, So I think that there's something to be said about not overextending your savings account. But you need it. But yeah, if your money's just piling into a savings account, or stashing it under a mattress, you're losing money every year. You're not gaining it. So definitely need to learn how to invest it properly.
So the way you're coming at it on one side though of, if someone has more than 6 months of living expenses saved up in a savings account,
right?
The vast majority of Americans, like that's foreign language to them. Like that sounds like millionaire lifestyle to them, because I don't remember the exact statistic, but it's like, man, the majority of Americans can't pay cash for a $400 emergency.
Right.
Which is like, dude, I've been there. Like I've been in that situation where my electric bill was $300 and I only had $100 budgeted for electric. And the first winter in a place caught me off guard, and I didn't have the $200, man. So,
Right.
I think that's the position a lot of people face and find themselves in. So what foundations do you think have to be in place before a guy starts investing, before they start trading? Or is that something where you're like, hey, investing is step one? Like you've already alluded, like Dave Ramsey would not say investing step one. Like, I'm not
So,
trying to put
yeah.
you at war with him or anything, but
No.
like
Investing,
what foundations do you
I
think-
want to clarify. Investing is step 1A, right? I mean, but you have to have an emergency fund, especially if you're a father. Okay, so like no matter how hard it is, no matter what you have to do to get that savings account built up to a level that you're comfortable with. Again, it doesn't have to be 3 to 6 months, but you have to have something to keep the food on the table, to keep the heat on in your house, right? You got kids. So like you got to have something to protect that. And at the absolute worst case scenario happens, right? God forbid. So you got to build that up, no matter how hard it is. Go get a second job, right? Go, pick up extra hours, pick up extra shifts, do whatever you got to do. Get that emergency fund built up. That's like, to me, that is step one, 100%. Okay. The reason that some people say, pay off all your debt first, right? Or invest first and then pay off your debt. And it's all kind of like, it's based on two different really scenarios, right? I mean, it depends on interest rates that you're paying on your debt, right? If your debt interest rates are like for student loans, for example, some of them are crazy, right? I mean, you could be paying 15, 20% interest on your, on your
Is
debt.
it that
there.
high on some student loans?
I don't remember exactly what mine were because I've been paid off for a few years now. But like when I was paying them, I remember that some of them were insane, like 15, 20 something percent.
Wow.
I mean,
I think I had some at 6 or 8%, but that
I don't even. Maybe I'm exaggerating in my mind because it was so
They're
like
crazy,
terrible.
though.
But they were bad. But essentially, what you gotta think of is, okay, if I were to put my money in just the S&P 500 only, right? Like just the main index fund of the stock market. If I were to put my money in there, then on average, year to year, you're going to make between 6 and 10%, right? I mean, like on just the average. Last year was obviously different. I mean, right?
Yeah.
Not every year is like that. But if you put your money in there, 6 to 8% or 6 to 8, 10%, whatever on average. Okay, well, if that number is higher than the 2.5% you have on a car loan, right? Then what's more important, to pay off your car loan at 2.5% return, to get it paid off early so you're not paying that 2.5%? Because essentially you got to think, if you pay off debt early, you're giving yourself a 2.5% return because that's 2.5% you're not paying. Or do I invest that money and get a 6, 8, 10% return and just keep paying the minimum payments on my car, right? Whatever that looks like.
Right.
So then your return, you kind of have to balance, okay? Now, the reason Dave Ramsey talks the way he does is because a lot of people don't have that sort of discipline, right? I mean, they'll just keep adding debt to their pockets. They'll just keep, whatever. They don't understand that, that they're crippling themselves. So he's like, get all your debt paid off first, okay? And that's like a good way to think for people who don't know how to manage their money and don't have the discipline to do it the most fruitful way, I guess. But if you do understand your money and you take the time to learn and you have the discipline to do it the right way, then it should really be a balance between interest rates, what you're paying, for this debt versus what you could be getting, from the market, so on and so forth. A lot of, the richest people in the world use debt as a tool. I mean, they'll take on more and more and more debt, right? Because the debt that they take on, the interest rate is lower than what they'll get in return from it. So, I mean, debt is not evil, okay? It can be if you don't know how to manage it and you don't have discipline, but it can also be a tool. So it's very personal. That's why I think everybody should have a financial advisor, a mentor, somebody that, really sits down and like from a non-biased third party position can look and say, this is the right decision. This is the smarter decision. This makes the most sense. And then some people just need to pay off debt for their own psychological benefit. And that's totally fine too. Even if it's not the smarter financial. If it's better for you psychologically, then it is a smarter financial decision.
Yeah.
So
Yeah. It is personal
balance.
finance. And I definitely, and I think you know this, like we lean towards the Dave Ramsey stuff. We're not like 100% in the cult. I feel like there's like a cult following there that kind of freaks me out a little bit. But definitely like, all right, he's completely anti-debt, aside from, you know, people taking on a mortgage. But I think like everyone, all financial gurus, so to say, at least recognize there is bad debt.
Oh yeah.
Right. Like, and there's good debt that a lot of people would refer to. And then there's like universally bad debt, you know? And that's like, man, like, and the credit cards I think are a killer for people.
Mm-hmm.
And it kills me, man, because it's like, there's no way that everybody is beating the system on credit cards because they'd be out of business. And everyone talks as if they're beating the system. It's like, I've heard very few people say that they're in tons of credit card debt. Everyone says like, oh, we pay it off every month and we just get the free miles and stuff. But it's like, dude, there's no way. Like, there are people walking around with tens of $1,000s worth of credit card debt.
Oh, yeah.
And it's like, man, if that's you, like, dude, tap into Dave Ramsey's show. Because he is great for helping you break out of that kind of stuff, you know, and that's what got us learning about finances, and paying off our debt. And so it's like, man, if you are drowning in debt, Dave Ramsey is the best source to turn to for that type 100%. Of thing. But if you are in a position where it's like, hey, we make a good income, we're living comfortably, but like, we're not maximizing what we have right now. And I feel like we should have more to show in the grand picture. Because income and net worth are two very different things. Yep. And that you could have a very high income and not a net worth that reflects that. And so, man, I think like what you guys are doing with StockDads is just, it's phenomenal for helping guys grow their net worth. Yep. Net worth is just, it's everything you own minus everything you owe. And so, man, it's just great for helping guys capitalize on that income. And it's like, man, if you are bringing in a good income, maybe you're bringing in 6 figures between you and your wife or something, man, it's like, hey, you should definitely be investing. You should be setting yourself and your kids up for the future. And it's your responsibility, I feel like. And it's, you know, like, you don't want to be that parent decades from now relying on their kids to take care of them. Right. You know, that's like a fear of mine. Like, I don't want my kids having to take care of me one day. Right. You know, it's like, I'm too stubborn to like have to rely on anybody else like that. You know what I mean?
Yep. 100%. I think you're spot on. I think Dave Ramsey, like I said, I got no beef with Dave Ramsey. It's just, it's a starting point, and it's great for, you know, the people that need it at that time. But there is a next step, is what a lot of people don't understand. They get stuck in that, you know, just keep no debt and you're good, you know, right? But eventually, you know, if you arm yourself with knowledge, you know, there are good debts and there are ways to leverage that kind of stuff and use it to further yourself and to, like you said, grow your net worth, invest for the future, so on and so forth. So, but it's called personal finance for a reason. Right. It's personal for everybody. You know, some people have to have, you know, strict rules. This is what it is. Some people can, you know, ebb and flow between different strategies to do what works for them. But regardless of what it is, whether it's Dave Ramsey or it's StockDads or whatever it may be, you have to educate yourself, period. Without the education and the knowledge, you're powerless. So,
And if you're in the gutter, man, like if you're listening, you're in the gutter, like do whatever it takes to get out, and you can break your way out of there real quick. Man, when we started really taking control of our finances, we were outside of the mortgage. We were about $80,000 in debt. And like we broke out of that in 20 months that we live 100% debt free.
Killer.
And so it's like, but man, like we hustled and grinded for those 20 months. But dude, it's like, do whatever you have to, like sell your sneakers, your sneakers. Like your sneakers that you own are not worth your kid's future. Nope. Like it's not, dude. And like, I didn't really start collecting until we were out of that.
Yep.
You know, like, and that's when we started having all this budget.
You got some
freed
play
up.
money. Yeah, I mean, you got
some
money
play
to,
money,
to take care
you know?
of. You sacrificed
so-
in the short term to benefit in the long run. Yeah.
Absolutely. So, dude, DJ, thank you so much for coming on, man. I could talk about this kind of, like, I nerd out on finance stuff. Like, I could talk about this kind of stuff all day and get into it. But if guys want to get connected with Stock Dads, if they want to learn to trade and invest, what's the best? The Stocks and Sandals podcast. And you mentioned there's a Discord, and I've been in that. Like, it's full of resources, tons of books in there, different people you can chat with. So, like, how do people get connected with that?
Yeah, check out our website, StockDads.com. You can go to the plans page and you can see how to enter our premium Discord. If you're not ready to join our paid stuff, right? I mean, that's when you're ready. We have a ton of free content. Like you mentioned, the Stocks and Sandals podcast. We've got a free Facebook group. It's called Stock Dads. I think it's Stocks and Options Trading for Dads is like the whole long, SEO optimized title. Right. We've got an Instagram page that we put out a ton of, great content on Reels, TikTok, a ton of great TikToks that we put out there, talking about different trading strategies, investment opportunities, so on and so forth. We have a daily newsletter that goes out to everybody's email. You can sign up for that, stockdads.com/dadvantage. It's the Dadvantage report. I'm big on dad puns, But yeah, that's where you can find us. We're all over the place. So, if you're ever in the Discord, I'm the Stockfather. That's my username. So, feel free to send me a DM. We'll chat and, would love to have anybody listening here. Maybe I'll send you a promo code to put in your show notes and you can, forward some people along with the discount.
That's awesome. Appreciate that. All right. So before you go, if I remember right, you're a big dad joke guy, right?
Mm-hmm. Yep, I am.
My father would be pleased with this because he also is. We have not had a dad joke on the Kicks and Minivans podcast yet.
Oh, boy.
So I am giving you permission to grace us.
Man.
And I didn't give you a heads up on this one. This is
I know you put me on the spot with like I'm an opportunity dad joker, so like in the moment.
It's got to be in the moment.
I have one that's my favorite, but it's a little dark. It's a little bit dark. I don't know what level we're talking about here. Sheesh. I'm trying to think. I'll go more PG here.
Dude, if people listen all the way through to this part, man, just like,
you want to go with the dark one? It's not that bad. It's really not that bad. I mean, if you can't giggle at it, then just find a way to cheer up because it's not that bad. But all right. So why didn't Batman have supervision?
I don't know.
His parents are dead. I told you it's a little dark.
The Joker would say that if he knew his identity.
It's evil. I couldn't. I love dark humor, man. So I'm sorry. I apologize to anybody I offended with that, but it's my favorite. It's my favorite. So I got to roll with it.
All right. Well, I'm a little regretting.
You could cut that. You could edit that part out. You could edit that part out. That's fine.
I feel like it has to stay, but yeah. All right. Well, on
that note, let's end the show.
Well, DJ, dude, really appreciate you coming on, educating us. I enjoyed the conversation. I think our listeners will too, man.
Yeah, I appreciate you having me, and look forward to seeing where you take this. I've been loving listening to the show so far, and it's been valuable for me, so I hope it's valuable for others for sure.
Appreciate it.
Well, the drop for this, evaluate your finances. Where are you at? Are you investing for your future? Are you investing for your kids' future? Are you doing things to build that generational wealth? Are you doing things to set your kids up to be in a better position when they start their adult life, to be in a better position than you were when you started? I think that's like the goal for us as dads, is to set our kids up for the future. Not that they'll just have it easy, but that they'll be in a better spot than we were so that they can make their dreams happen. So evaluate where you're at. Are you investing? Are you putting money away? Do what you got to do to make that happen. Hey, and if you need to, if you're in that cycle of living paycheck to paycheck and you're like, bro, I can't breathe in my finances, I don't know how I'm putting gas in the car, check out the next episode, episode 10, on how we paid off 80 grand in 20 months. And hopefully that'll help you out as well. Hey, until next time, handle your money, take care of your finances, take care of your family, take care of yourself. Thanks for joining Kicks and Minivans.